Hello everyone and welcome back to the Cardonomics YouTube channel. So today I'm going to do another analysis on the AUD yen. I keep an eye on this chart because I do buy a lot of goods from Japan, so it is something that is applicable, to my life and things I purchase. So and I like to analyze charts and data as well. So this is, something I do for a bit of fun, but can give us a bit of an idea of where things may be heading. So I like to put the pieces together and try and come up with, what could possibly be coming next. So last month we had Japan intervene in the currency. It was sort of right up here, and that's a probably level they didn't like. So we're seeing them take drastic action to protect their currency, and that's how we got this, big drop in the chart against other majors. So since then, it's been brought back up. So we actually closed the month green in August. So that was one of the scenarios I pointed out in my last video that could happen, and that did play out. So now we look at the next month and what could possibly be next. So when I did my first analysis here, I was kind of looking at this area is where we could probably be in the current cycle compared to the last one. But now I'm actually leaning more towards that we're in this energy here. And I'll give both scenarios and what to look out for as to what could help those two different scenarios play out. But one thing I found interesting is, and again, this is only 3 iterations. It is a lot of data. It is a long time, so we're not going to have much of these points when we look at a monthly to look at. It is a, a larger macro time frame, but nonetheless, we do have 3 iterations where we breached this point here on the RSI, which marked the top each time. So we see here back in April 97, this marked the top. Back here in May 07, marked another top. And then we see that again in today, around June this year, where it actually marked another top. So that's interesting to know. We could actually have seen the top of the AUD yen already come in if we were to repeat those last 2 iterations. But we could possibly have this happen again where we sort of come back up and get rejected hard again. And I'm gonna entertain this more at this stage and I'll explain why. But one other thing I found just to point out that we'll go on a weekly quickly. I just wanted to show people this because I do play around with other time frames just to see what could possibly be going on. So now we're on a weekly. I'm going to bring up the 200 SMA. So just look at the green line here is what I want to focus on. So when this happened here, and we'll try and zoom in here. So this particular candle here, which was also in August, where we did sort of have a big dive, against the AUD and yen. That hit the 200 SMA perfectly before it recovered. And that's exactly what happened in this iteration as well. So we had the big drop, and we perfectly hit this level again. So that was an interesting data point to look at as well. We could probably use this, as a support if we did break the 200 SMA moving forward. Which what happened here. We're in for a big crush again. So that's probably one level I'll be keeping an eye on. So that was just an interesting data point that I found. So let's go back to our monthly. Okay. So we'll look at interest rates and the relationship they have with currencies. So just going off here, this is a little article I found on the Australian interest rate news. So we're going to see cuts or more rises. So here is say economists at the nation's big four banks are still predicting that we're seeing the peak of most of the recent round of rate rises. But none of the big four anticipate we'll see cuts before November. And the ANZ and the NAB predicting even later, which is around February, as we'll see as we read the article. So Adam Boynton, head of the Australian economics at ANZ, said that we're well over a year, or for well over a year, the bank anticipated that the first round of RBA rate cuts would occur in November 2024. So more recently, however, we've been cautioning that the risk around that view was skewed to the later start to the easing cycle, he said, adding that the bank's current position is for a rate cut in February 2025. So the banks are on the same side that we're going to get rate cuts, whether it happens in November or February, only time will tell. So there's a bit of reasoning here. This is another opinion that goes against that. So will interest rates rise again in 2024? Well, some are predicting rates may hold, others are anticipating a hike. So Warren Hogan, the chief economic advisor of Judo Bank, who predicts as many as 3 more rate rises before the year's out, is speaking with the Australian Financial Review. In April, Hogan speculated that we may be in for a quarter percentage points rise when the RBA board meets again in August, September, and November, bringing the cash rate to 5.1. So in August, we didn't get it. September is yet to happen. So with rates above 5% in the US, New Zealand, Canada, and the UK, Hogan believes that it's only a matter of time before Australia's central bank hikes again, saying that its current strategy of holding doesn't seem to be working with inflation remaining high. So further rate hikes would see variable rate home borrowers in for more mortgage pain after a steep series of hikes throughout 2022 and 2023. So if we do get rate rises again, we'll just have a look at the Australian chart. So we'll look at the last land cycle over here where Australia did rise right into the end of the crash. So this is a GFC crash. So if we do get something like this happening again, which, in my opinion is less likely because the economic climate's not the same as it was back here for Australia, that could prolong the cycle for the AUD yen. This could see the AUD stay strong against the yen for a longer period of time. And, here we see where we are now. A bit different conditions. We can look at Japan as well. So when Japan, this data goes back a bit further. So this is the first land cycle that we can look at, back when the crash happened, in the late 80s, early 90s. We can see Japan go through a bit of a rate hike before they start lowering again. We can see that again, they went through 0% interest rates for a long time through this period here. And then we see them raise up to 0.5% just before the crash. Then they lower again. Japan have actually stayed at 0 or negative, since then. But then we see them starting to raise again. And, from going off this data here, we see that we expect Japan to continue raising their rates, possibly, forecast between 0.6 and 0.8%. And it doesn't seem like a lot, but that can still have a great effect on their currency, versus other majors. So, we can look at both scenarios here when we go back to the chart. So if that tends to happen where Australia continue to raise or hold rates, American can lower rates, that will make their currency weaker. There are other things that they can use or tools we can say, to inject more cash into the economy, and, banks can ease lending. There can be a lot of things that can happen to stimulate the economy, but we'll just focus on rates right now to make it simple. So if that happens and we continue to raise rates or stay, elevated for longer, I would say we're more in this energy here. And like my first video, we can overlay this on the current cycle, and we can probably expect something like that to happen. So that's one scenario which I think is less likely now. And then we go to the next scenario, which I think is probably more plausible now based on the economic conditions that we're in. If this is the candle here, which also happened in August, so we see August candle here, big dip and buyback. Same thing here, August, big dip and buyback. If we go from that phase here to the crash, we could probably place this somewhere like that, where we could see another buyback up, reject it again, and we play around here, and then we crash again. So if Australia does either one or two things, we start dropping rates in November, along with America and the rest of the world that is going to be in their easing of rate cycle. If that follows, then we can probably even move this even lower. So we can see now we're getting rejected off the channel. So if that continues and we drop, sooner than expected, then we can probably see this playing out where, the highs are in, and we're not going to see those levels again, you know, for this whole cycle. If we do raise in February, we can probably entertain this, where the next 2 months we sort of come back up and we float around here. I think those two scenarios are very plausible. That's probably my most likely scenario. I'll probably put it at 70-30, 70% more leaning towards this, even higher, but let's go with that. So yeah, there's something else to consider. That's how I'm looking at it right now. I'm planning a holiday to Japan in April next year, so I'm really looking at this to purchase yen for the holiday. Because if this does happen over the next 2 months and we reach these levels again, even now is probably a good buy at the current price. 98, 99, still a decent price, because if we do go lower, and I end up buying in, let's see where April is. If I end up buying here, it's actually going to make my holiday a bit more expensive. So I'll leave it there. Thanks for watching, and I'll see you on the next one.